Assalamualaikum to our panelists today, Madam Rabiatul Alawiyah and Sir Kamal Farul Razi. Today, me and my group will be presenting on our report on our financial analysis and technical analysis. To begin, let me introduce my team. I myself am Muhammad Naim bin Muhammad Firdaus. Next is
My name is Muhammad Hafiz bin Subarni.
My name is Nurul Izzah binti Amir.
My name is Denisha Shafika binti Ridwan.
And I'm Nura Amirah binti Ahmad Zamzuri.
with my team introduced. Let our presentation begin.
Okay, so first of all, we'll talk about the asset structure of Darby Berhad in 2017, 2018, and 2019. This table shows the asset structure of Darby Berhad. As we can see, Darby had a total of 67,680,000 ringgit total asset in 2017, which makes it the highest total asset during the period. The company reduced their non-current assets from 53,988,000 ringgit to 10,752,000 ringgit and 10,448,000 ringgit in 2018 and 2019. However, the current assets continue to increase between 2 to 3% for each year, which means from 13,691,000 ringgit to 14,121,000 ringgit in 2018 and 50,068,000 ringgit in 2019. So I'll pass to Hasif to talk about the financial structure.
Next is financial structure. From the figure, you can see the company current liabilities are increasing over the current 3 years from 2017 until 2019. The current liability section of the balance sheet shows the debt the company owes, which must be paid within 1 year. These debts are the opposite of the current assets that are often used to pay for them. The higher the debt, the more companies will have to pay. For non-current liabilities, the value decreased from 2017 until 2019. As the value of long-term liabilities is declining, it shows that the firm has fewer liabilities over the years. In the case of equity, the value decreased in 2018, but increased slightly in 2019. In 2017, Darby recorded the highest amount of equity, while the lowest amount of equity is in 2018. The equity is the total amount of money received from investors plus the accumulated earnings of the corporation. Lower equity means the ability of the company to pay less dividends. Next, I will pass to Danisha.
Next is horizontal analysis. First is liquidity ratio. For quick ratio and current ratio, we can see that Hong Leong Industry has the best result. This ensures that this organization is well positioned to handle its liquidity and financial health and more capable of paying its commitment because it has greater share of the short-term value of its asset compared to the value of its short-term liability. For net working capital, above all, the RB income show the best performance and it indicates that the company financial resources will be able to fulfill all of its short-term financial obligations. Next is leverage ratio. For debt to asset ratio, the lower ratio indicates better performance. In this case, the RB income reached 0.9%, meaning that the company is in stable condition. Darby and Hong Leong ratio is over 1%, indicate that a major part of the portfolio is financed by debt. In other words, this company has more liability than asset. For debt to equity ratio and time interest earned, Hong Leong Industry show the good performance, which means that this company has a lower amount of debt funding by lender and pose less risk to investor and creditor in terms of solvency. Next is activity ratio. Derived from the graph for fixed asset turnover and total asset turnover, Hong Leong Industry show the best efficient, indicating that the company make effective and efficient of use of asset to generate revenue, and good in managing their properties to generate sales and revenue. Besides, in fixed asset turnover also, Sime Darby and Cycle and Carriage Berhad also show the good performance in using their asset to generate revenue. For the graph of inventory turnover, we can see that the RB Hikam Berhad, Hong Leong, and Sam Darby has strong output. In addition, these three companies is selling product rapidly and there is significant demand for their product on the market. For average collection period, Cycle and Carriage Bintang Berhad only take 24 days in collecting back their payments. So it is mean that this company are good in collecting back their payment rather than other company. Profitability ratio. First is net profit margin. Hong Leong, Industry Berhad DRB Hikam and Cycle and Carriage Berhad also and the MDM resources show that this company are efficient in generate their profit and value for their shareholder. Next, I will pass to the next presenter, that is Nurul Izzah.
So next, we move to vertical analysis, and this is the liquidity ratio for Sam Darby Berhad. So for current and quick ratio, it indicates that the higher the ratio showed the better performance of this company. And as we can see here, the highest current ratio for Sam Darby Berhad was recorded on 2016 at 1.82 times. It means that the company is able to pay its RM1.82 for RM1 of its short-term liability. And for quick ratio, the highest was recorded on 2016 at 0.903 times. And this means that the company is able to pay without having to rely on the illiquid current assets. Is RM 0.903 for RM1, it's short-term liability. And for net working capital, Sam Darby Berhad showed the better performance because it recorded the positive amount. The positive net working capital indicates that the amount of current assets financed with long-term financing. Next, we move to leverage ratio. So debt ratio and debt to equity ratio indicates that the lower the ratio showed the better performance of this company. And for debt ratio, the lowest ratio was recorded on 2017, which recorded at 14.54%. This means that the company was not depending too much on debt. Meanwhile, for debt to equity ratio, the lowest was recorded on both 2018 and 2019 at 0.06 times. This means that the Sam Darby Berhad indicates that creditors provided 6 cents for RM1 provided by the owners. And the creditor's position is less risky compared to the owners. While for times interest earned, the higher the ratio showed the better performance of this company. The highest time interest earned was recorded on 2019 at 11.15 times. And this means that the company is able to meet the interest payments, or in other words, it is able to pay the interest, and the extent to which earnings can decline without resulting in financial embarrassment. And then we move to the activity ratio for Sam Darby Berhad. For inventory turnover, the higher the ratio showed the better performance of this company, where the highest ratio for inventory turnover was on 2015, recorded at 4.53 times. It means that the firm effectiveness in its inventory management is relatively good, as with RM1 investment in inventory. The firm is able to produce RM4.53 of cost of goods sold. And for average collection period, the lower the ratio showed the better performance for this company, where the lowest average collection period was on 2019 at 41.02 days. This means that the company is able to measure how long the company can collect back the payment from customer. And then for fixed asset turnover, the higher the ratio for fixed asset turnover showed the better performance of this company, where on 2019, it recorded the highest fixed asset turnover at 3.49 times. It means that the firms managed to generate RM3.49 for RM1 investment in its fixed assets. And the last one for total asset turnover, the highest total asset turnover was recorded on 2019 at 1.42 times. And at total asset turnover, Darby was managed to generate RM1.42 for RM1 investment in its overall assets. So this is the last part in vertical analysis, which is profitability ratio. In profitability ratio, it indicates the higher the ratio, showed the better performance of Sime Darby Berhad. So in gross profit margin, the highest ratio was recorded on 2015 at 7.77%. And this means that Sime Darby Berhad is able to control the cost of goods sold relative to its sales revenue. And then for operating profit margin, the highest ratio was on 2015, recorded at 7.77%. And this means that Sime Darby Berhad was able to measure the productivity of assets in providing returns to their shareholders. Net profit margin, it indicates that Sime Darby Berhad was able to generate the net earnings or earnings available for shareholders of RM0.0591, which on 2019 was recorded at 5.91%. And return on asset, it showed the highest ratio was on 2016 at 4.05%. And this means that Sime Darby Berhad is able to generate the net earnings of RM0.0405 for RM1 investment in its assets. And the last one in profitability ratio was return on equity. The highest ratio was recorded on 2015, which at 7.96%. And this means that the company is able to measure the ability of the firm to reward their shareholders by giving the dividends. And then I will pass to the next presenter, Naim.
To begin risk evaluation, first is expected return. Expected return is the return of an investment which relates to risk. Thus, an investor who is evaluating a future investment will anticipate a certain rate of return. A larger range of possible return makes the investment risky. From the table, Hong Kong Industries has the highest expected return from 2015 until 2019 with 0.0785%, while Sandarbi Berhad recorded negative return with negative 0.0652%. Sandarbi Berhad has negative return because the price of the stock dropped below the price in November 2017 and be suspended for 3 days. This is due to the company decided to demerge the plantation, property, and other industrial division into 3 separate entities. The variance and the standard deviation indicate how the actual values differ from the expected value for the given series of values. The greater the variance in expected return rates, the greater the dispersion of expected returns, and the greater the uncertainty or the risk of the investment. From table, DRP HECOM recorded the highest variance and standard deviation with 6.5068 and 2.5508 respectively, while Hong Leong Industries recorded the lowest variance and standard deviation number with 1.8536 and 1.3615 respectively. The coefficient of variation is to determine how much volatility investors assume in relation to the amount of return they can expect from their investment. A higher coefficient of variation signals that it has a much higher risk. From table, Cycle and Carriage Berhad has the highest coefficient variation with 33.3290. Sandarbi Berhad recorded negative coefficient variation with negative 38.3742. It indicates that Cycle and Carriage Berhad stock is riskier compared to other companies. Next is regression analysis. To start regression analysis, I will explain about beta. Beta is a systematic security calculation relative to a business. In CAPM, the broker return on the assets was determined on the basis of the beta and projected market return. If the value of beta is 1, the security price will shift to market. The low risk sector will decide if the beta is below 1, which means the safety is less risky than the market. If the beta is greater than 1, defense is a risky investment, since the protection is more uncertain than the market. This table indicates that beta is more than 1. Therefore, all 5 firms are low risk. Next is rate of return. The rate of return is the next benefit or loss of investment for a given duration. In this case, we can see that all 5 firms will reap profit from a good return, in contrast with other companies with 19.752%. Darby Berhad has the highest benefit. Next is risk-free rate. The zero risk investment return rate is a risk-free rate. It means investor interest is anticipated for a certain from a risk-free investment. Based on risk premium data, Malaysia free rating is 3.2%. The basis risk premium must be established since it is the formulation of CPM. Darby Berhad, MRM Resource, and Cycle Cash Bintang Berhad are high relative to the base return with 3.9564%, 9.9964%, and 3.8375% respectively. Next is security market line. The graph above displays Darby Berhad, Darby Corp, and Hong Leong Industries, the MBM Capital, and the Bintang Berhad private carrying axis. The businesses are focused on the estimated return and beta for all businesses. Darby Berhad is the largest business and the total return is 3.9564%. That shows how overperformed Darby Berhad is. The explanation is that the stock return is negative 1.3396%. Any shares above the security market are undervalued, and any shares below the security market line are known as overvaluation. The formula displayed under the graph is used to calculate this. Next is company intrinsic value. On the basis of this, Darby Berhad projected return is overvalued at 1.3396% compared with 3.9564% average return. This reveals it to be an undervalued stock, which means the worth of the company is equivalent to the actual price of the market. Next is Darby Highcom. Based on the above results, Darby Highcom is overevaluated as the average return is 1.178% less than the estimated return as compared to 0.0586% return required. The seller then should sell the stock, so the valuation is greater than underlying value and would be lower than the real value in future. Next is Hong Leong Industries. It indicates that the predicted return is overestimated since the average return is higher. Overvalued investors are an ideal for sale. Next is MBM Resource. They are underrated as the predicted return is lower than the average. Underestimated inventories are useful for buying opportunities. Next is Carriage Bintang Berhad. Based on the data above, it shows Cycle Carriage Bintang Berhad is undervalued because expected return is lower than the average return. Therefore, existing shareholders can buy the stocks because the undervalued stocks indicates that people are willing to pay for. Existing shareholders can buy stocks or even hold it for a long-term investment. And that is all for company intrinsic value.
Next, we move to technical analysis. Under comparative analysis, between Darby Berhad versus CLCI, the aim of comparative analysis is to look for the relationship and volatility of the selected company, which is Darby Berhad compared to the market. The analysis helps the investor to forecast the future price projection. From the figure, you can see that Darby Berhad performance are higher than CLCI index, but starting from the end of November 2017, the price dropped below CLCI index until December 2020. The performance for both Darby Berhad and CLCI index show a downtrend from 2018 until April 2020. As the price of the ringgit falls, the performance of the FBM CLCI will also fall. In addition, the FBM CLCI will also be affected by the fluctuation of crude oil in the global market. Next, for Darby versus competitors, Darby Berhad highest stock price was RM7.35 in 27 November 2017. In 30 November 2017, the company had a decline in its stock price, hitting its price at RM1.94. However, the price has increased in January 2018 and has been on a sideways trend until current time, with only minor fluctuations. Other than that, the Darby Highcom and MBM Resources Berhad have higher change of price than Darby Berhad, as said in the graph. Moreover, Cycle and Carriage Berhad was the lowest in price from all of the competitors when we compared. The highest price being reached just RM3.19 in February 2017, and the price keep decreasing until November 2019. After that, the price remained RM1 and above, but not over RM3. As for the conclusion, Darby still can stand firmly in the market, even there are the bearish trends that appear, but the signs of bullish are being seen, and it is predictable on becoming uptrend in a few more breakthrough of resistance line. Next, I will pass to Danica.
Next is support and resistance. Derived from the graph, Sam Darby has hit support line in 4 March until 9 April with the price of 150 compared to the other support line that occur in this year. This month show the lowest price of share price. Furthermore, due to the MCO that has been implemented, concentration of demand of buying interest start to decrease. Next, resistance line occurs from October until end of 2020 with price of 2 ringgit 30 cent. At this part, seller become more attractive to sell and buyer become less attractive to buy. The bull has won out over the bears, but it indicates that the new willingness to sell, resistance break, and new high indicate buyers have increased their expectation and are willing to buy at even higher price, or in other words, or it is because of the increasing in selling interest when price have increased.
Okay, so the indicators of Sindapi Berhad are analyzed on the short term and intermediate term of indicator signal. So this is the short term basis indicated from 10th of December 2020 until 31st of December 2020, which makes it as 21 days of indicator signal. The MA line has crossed below the buying signal, which is signaling the traders to sell according to the green box here. And the MACD line here are the blue and the orange lines. It shows the blue line represents the sell signal, however the orange line represents the signal line. It shows that the price is going down as the blue line is above the orange line. Next, the RSI. Here, RSI is fluctuating between 60% to 40% from 10th of December to 31st of December. The company has positive and negative ROC, which is between 2% to negative 2%. Clearly, the graph shows that the company has more negative ROC, as they are the sell signals for investors. The company also was having a downtrend as the stochastic oscillator here, the K percent line crossed the D percent line. So for the intermediate term, this chart shows the 3 months indicator, which is the intermediate terms basis of this analysis. The MA line here on the 28th of December has crossed above the buying signal, which is the signal for investors to buy stocks. The MACD line was crossing below the signal line. It indicates that the investor should buy stocks on that time. The RSI have not made a clear buying or selling signal because the RSI was fluctuating between 60% to 40%. The ROC of the company in the early of October was at the lowest pace, which is 8% here. It is a sell signal for investor as well. On 12th of October to 22nd of November, the company was having a downtrend as the stochastic oscillator has crossed the D percent line. So that is all for the technical analysis from us.
As a recommendation, after constant evaluation and re-evaluation, we can confidently recommend to future investors to buy some Darby Berhad shares and for current existing shareholders to buy more shares or hold for more profits.
So that's all from us. Thank you for watching.